Welcome. Today we're going to show you the trick to 100% financing in any market on any project. We're going to show you exactly what large developers use to finance their projects all the way up to 100%. This will allow you to take advantage of this market and beat your competition. If you're new to my channel, hi, I'm Mike Bond. I'm here to give you the knowledge and the information to be the top real estate investor in your market, because I want to help you make the money you need to live your best life. Now, to do that, make sure you hit the like button, subscribe so you can watch videos just like this one. So surprise, what's happened? The Fed's tightened the money supply, and guess what? Lenders start taking money away from what we're going to call your money bucket. This means how much they're going to lend to you. So we're going to show you today how to fill that bucket with other sources of funds, just like they do in the big projects. In finance, we call it a capital stack. That's where we stack one loan on top of the other to get us to 100%. That same type of financing is available to anyone. You just have to understand exactly how you put your stack together. In this video, just to make it easier, we're going to call it buckets of money. We're going to show you how to create your 100% bucket of money on any project you do. So now let's look at our buckets. On one side, we have the bucket that you need the money for, your needs bucket. We're going to need money for a purchase price. We're going to need money for rehab, and we're going to need some money even for carry and miscellaneous. Carry is kind of like your interest payments, your other things that come up that you'll have to pay. And on the other side, you used to have a bucket where the lenders would lend up to 75% of the ARV, the after repair value, and up to 90% of the purchase, 100% of the refi. Now what's happened is they've changed those underlying guidelines almost universally. You're going to see now out there where they only go up to 70% ARV. So they've now cut 5% off of their funding, money that they would lend you. And they've also cut most of their programs to 80% of the purchase price, meaning now they've cut about 10% off the purchase. They cut us 5% on the ARV, now they've cut us 10% on the purchase. Yes, they'll still do 100% of the rehab, but what this means is you're still going to have to bring in more money. In most cases, it's double what you brought in just 6 to 9 months ago. So where does this money come from? How do we fill your bucket so you can keep going, keep buying these properties, especially when the deals are getting very good? You want to be able to still be in the game and finance these deals as they come up. So there's 4 ways you can finance in any market, but especially in volatile markets. Where people start is lines of credit, secured lines of credit. So that may be a HELOC on your personal property. It may be a HELOC on your investment property. This just takes good credit and good income and a piece of real estate to make this work. But if it does, it's the perfect fit where you could take money out as you need it for each project. The trick to all of these is making sure you treat this like a business. So when you take that money out on a line of credit or somewhere else, make sure you pay it back. It's not like you're paying off a lender who requires it, so make sure you treat this like a business. Pay it off when the project's done. Keep the rest for your profit. If you start using this as a personal piggy bank, all 4 of these items will fail and you will be out of business real soon. The other way to fill your bucket to get more financing is to get secured gap funding from someone like a private money lender like us, like any private money lender in your area. This looks like you have a property, but maybe you don't have the income, maybe you don't have the equity or the credit to get it from a bank like a HELOC or other secured line of credit. So you go to a private lender and you get that same kind of loan to fund a project. It may be part, it may be for the down payment, it may be for those carry costs or the rehab, whatever it is, but you use another property to secure the money for the property you're purchasing. Number 3 is a great tool if used correctly. It's 0% unsecured lines of credit and credit cards. Yes, you heard me right. People use these all the time, because just think of the 3 things you could use them for. You could take money out for down payment. You could take money out to do the rehab. So even if you're using a credit card right now for a project, and with credit card rates of maybe 19 to 29%, you're paying somewhere between $5,000 and $7,000 a year on a $25,000 balance. 0% is better than paying 10 to 15%, correct? So using these cards correctly, which means it's a stepping stone, typically use them for 1 to 2 years, keep that 0%, maybe even change cards, use them, and then get rid of them, and then step into the next, which is funding those yourself. It is the perfect stepping stone. If you save $6,000 to $12,000 a year on multiple projects, that all comes back into your pockets. Number 4 is really the power tool. It is OPM, in other words, ordinary people's money. Some people call it other people's money, but we call it ordinary people's money, because the real big investors, they always have multiple ordinary people's money in their projects. Why? Because these people have fast, cheap, and easy money. It doesn't matter if you're new to the business or a veteran. This works perfect to fill your bucket. This is the way that you could fill your down payment money, your carry money, or just your reserve money. Whatever it is, you need to find that person, that ordinary person out there looking for a better return. Because guess what? There's more people out there looking for a better return, a secured return, than you are looking for their money. So this is a lot of information to go through. Our whole thing is to give you an overview. The market has changed. You're going to have to put more money into deals, which means you're going to have to bring more money from a line of credit, from gap funding, from one of these unsecured business lines or 0% cards, or from OPM. We can't go through each one of these in detail. That's why we're going to do a separate video just to make sure we hit every positive and negative of each one of these items. So check out these videos. We're going to go through the line of credit. We're going to go through the gap. We're going to go through the credit cards in detail and OPM, where do you find it and how we can help. Now, the larger the bucket of money you have in any market, the more options you will have. It doesn't matter the market, you just need a bigger bucket of money to make real estate investing easier and more profitable. Now, we have a free gift for you, but if you enjoyed this video, check out these other videos. Now for that free gift. Below, you're going to find the pros and cons of the 4 items we went through: the lines of credit, the gap, the 0% cards, and the OPM. It's called Your Money Bucket. So you can check it out below, and we'll see you on the next video.